this can be a very good and informative panel for everybody. We're going to be talking about security-related topics around blockchain. And just going to share that with you again that after this panel we're going to have a good reception. So hopefully we can continue some of this discussion over some more food and drinks and so on and let our minds go all over the place. So as the introductory part to this panel, I'm going to ask each of the panelists to introduce themselves and then what business they're in, and at the same time, how basically security and blockchain comes into their business. So we start with your side.
All right, thank you. My name is Ziga. I'm a founder of Origin Trail. Origin Trail is an ecosystem that is designed to help companies improve transparency in supply chains. Initially, we did not use blockchain. We started off in 2011 as college dropouts. But then towards 2016, 2017, we started experimenting with Ethereum mainnet, and then saw that there are certain barriers to scalability, also to security, and that's why we open sourced Origin Trail as being the layer 2 scalability protocol, also taking care of certain security issues. And we were also looking into, because this is the kind of the relevant space, into open calls of the Department of Homeland Security here. Actually, they're the Silicon Valley Innovation Unit. And one of the stipulations in their open call was that companies applying to their open call should never publish personal data on blockchain in encrypted or unencrypted form. So this is just kind of one of the touch points where the security is important for our company.
Yeah, so my name is Ashwini and for the last 14 months I was the Chief Information Security Officer for a blockchain startup in the financial technology sector. So, as the CISO, you have to deal with pretty much all aspects of security. But since blockchain was an integral component of the product that was being developed, specifically they were using Ethereum, smart contracts was something that I had to deal with. And my background is in systems, so blockchain at the end of the day is a peer-to-peer system, so there are a number of problems that happen at the network level, so I'm very familiar with those things. So yeah, so that's kind of how I got into blockchain, because I was a CISO for a blockchain startup in the fintech sector. And since it's financial services data, I don't have to emphasize that security is important.
So yeah, I'm Chris. I'm one of the managing partners of a local venture fund called Sustany Capital. As you notice, I have an accent. I'm originally from Germany. I was a hacker for a very short period of time in the 80s before entering law school and then ending up being general counsel for one of the early internet service providers. And thankfully, we sold that at the height of the .com, which then I consequently immediately retired from the law to move to Southern California and joined a venture fund, and our initial focus was very much on things such as voice over IP technologies and multi-massive online player games. So as such, things like quote-unquote digital currencies have been around our thematics since like 1999. And peer-to-peer technologies, needless to say, that's what voice over IP is. So when the blockchain topic emerged, we were one of the first investors into the space. We created the Ethereum meetups throughout Orange County. We were one of the first allocators to that project as well. And we're more technical probably than most venture funds. We use our own funds. We don't run around and raise money. And we have our own data science team, we have our own hedge fund team, and we focus very much on 3 different topics within the narrow space of blockchain and graph technologies, which is money over IP, anything that crowds out the legacy fiat systems, including fiat itself. And secondarily, we focus on regulation technologies, anything that allows for capital formation, and then we focus on identity, where we just made our first application. So yeah, if you want to talk to any one of those specific topics later, I'll be happy to go into detail.
Thanks, Chris. My name is Joerg Roskowetz. I'm head of the blockchain business unit at AMD. So I'm working with AMD since almost 12 years, and within the blockchain area, I'm working since 5 years. And the last 2 years, we got the blockchain business unit convincing the management team that there is a little bit more than the crypto space. And we built 4 verticals within our business unit. So the first vertical is about enterprise solution. The second vertical is about gaming. The third one is about consortium activities, working, for example, with the EEA, with Bitkom, JBA, and with the BGA, Blockchain Gaming Alliance. And the fourth vertical is still the crypto compute stuff, also for enterprise customers. And of course, our question also from the top manager, so Lisa Su was asking, okay, what's our take within the blockchain? As you explained to me, it's more about a data center, it's a data subset, so, and we are a silicon manufacturer, so how can we contribute to that system? And I made the point, okay, it's about secure transactions. So because we need to make sure that all the clients, the sensors are connected to the network, will have secure transactions, making sure that data are not getting stolen or manipulated. What we can see specific, having those cross interactions between different systems, where you can read the points, okay, Bitcoin has been stolen here, Bitcoin has been stolen there. And we generated our roadmap in terms of those securities. So just think about sensor technology in the embedded edge technology. So how can we make sure that 5 degrees measured by a sensor are 5 degrees? And such kind of projects we are currently running. And I'm also happy to tell you a little bit more after that session, if you are interested in. Thank you.
Hey, my name is Sneh, Bhatt, the CEO and co-founder of Monarch Wallet. So basically what we are is a decentralized hub for centralized financial services, specifically in the blockchain and cryptocurrency arena. We have around 500,000 users, exactly 468,000 as of this morning. We are based in California. We went through the traditional startup arena, or crypto arena, where ICO were the big craze in the last couple of years. So that's what basically what we did. We have one central KYC process to log into all these different financial services, almost 15 different applications, all stored on Monarch Wallet, available on Android and iOS. I should always say that. Yeah, and there's a big component of security, specifically when dealing with that many consumers across the entire world, and especially pertaining to KYC and compliance regulations.
Thanks. My name is Utpal Mangla. I'm from IBM, and I lead IBM's blockchain business for telco, media, and entertainment industry. Obviously, as you can imagine, IBM has both blockchain software and services, and so we're in the business of making money out of it. And security is fundamental to anything that we sell from a blockchain standpoint.
Very good. So the title of this talk, this panel, Blockchain Security, 7 years, 72 breaches, is blockchain secure. And I think Chris, you done some research on this. So I let you.
Yeah, Farhad bought the title from a Wall Street Journal article. I don't know how much.
Actually, my colleague did.
Okay, I don't blame Farhad, I blame you. So it's clickbait, essentially, because I actually went through the trouble to contact the professor at MIT who borrowed that data from a research paper that one of his students did, and we did our own analysis in-house with Jonathan there, he's one of our analysts, and turns out none of the researched hacks had anything to do with blockchain, and everybody who reads the article on the panel will immediately say, yeah, that's right, because they were all like exchange hacks, like custodial exchange hacks, was most people in the audience will know databases. At the end of the day, wallet hacks, which are applications that don't really have much to do with blockchain. Yeah, so at the end of the day, unfortunately, reality doesn't have an advertising budget, right? And that's something that we see on a daily basis, specifically in this space, because needless to say, peer-to-peer technology threatens a lot of the current models because they replace the current middleman, the current custodians, and a lot of those currently run quote-unquote banks. And to that extent, there's a lot of funding for misinformation in that space. And I just want to offer a quick hack there. So to make it really easy for you to distinguish when is something a blockchain or DOT, ask yourself, okay, are they trying to replace the middleman, or are they trying to be the middleman? If it's the later, it's a DOT. If it's the former, it's a blockchain.
Any other comment on that?
Oh,
You guys?
Joerg, you want to back me up?
No, I fully agree to you. So those are the major complaints I also get from customers as well as from our management. Also, it's unsecure. We need to wait until there is business established in the field where we can provide further support. And so therefore, I really would like to mention here in regards to security. Of course, there is no guarantee for 100% of security. It doesn't matter which system I'm currently running. Everything can be hacked at the end. But what we can do is we can provide the next level of security specific on distributed platforms where we do not need to trust a specific entity at the end. And so, for example, what AMD is doing, so we want to bring back the trust level to hardware. So where we do not need to trust the software for particular transactions, for example. So we have a technology which is called PSP, Platform Security Processor, where you can put the transactions into a virtualized Kata container. So necessarily you can use any container you like. It's compatible to any system. We are working with a couple of algorithms like Ethereum, Consensus, iOS, and a couple of others to make this happen. And I think it's always a point specifically where you need to look about your application at the end, what you need. So is it sufficient enough to have security done by software? Is it secure enough if you do it by hardware? Or is it maybe a mixture of both technologies? And this is really depending on the use case you are driving.
Yeah, and specifically speaking on that Wall Street Journal article, I think there's a tremendous level of ignorance when it comes to blockchain education in this space. You know, I always compare it to if you've never driven a car and you got into a car and you don't know what a parking brake is, you won't know to use a parking brake, even though it's better, if you're parked on a hill, or just even your brakes or your clutch or anything like that. So there's not much education in this space. So I think the journalists, they like to wave their red flag before it actually needs to be waved.
Anything on your side?
Maybe I should support that article. Yeah, there is a lot of misunderstanding about what blockchain does or what it's about. Oh, we have a new thing, it's going to be secure, right? So I think part of that article was about decentralization, anonymity, and it was one consensus. So they were just saying that how decentralization, although it's a strength of the blockchain, it can contribute to security problems. So
reading it now, right now, just kidding.
So when there is.
I brought it. I marked it up for you.
So I'll just give an example, right? Decentralization, yes, great, but what does that mean to security? There is no off switch. There is no kill switch. There are thousands of nodes running the same software. You find a bug, how do you shut it down? You can't. So I guess part of that article was something like that. But yes, other part was probably.
So in general, do you feel that, continuing on that same topic, do you, from the security standpoint, what do you feel about blockchain? Let's discuss that. Do we think it is the security solution that we've been looking for as a, I guess, next step, security, or this has its own challenges like any other security solution that we have?
I mean, again, when we say security, especially as a CISO, security is everything. It's in every aspect of the system. Okay. So what aspect of security are we talking? Integrity, yes. It's a immutable ledger, so you want to maintain a series of whatever. You want to show that something hasn't been tampered with. Yeah, a blockchain can do it. But let's say that can we just put data? So blockchain basically makes n copies of something. So now we have n attack surfaces. And I have to now go and secure n copies of something. So it all depends on what is that we're trying to do with the blockchain. What's, as someone said, like, what is the application? What are we using it for? And from there we can start. So one thing I would like to add is that blockchain, the security attack, security can be, you can split into 3 aspects of it. One is just the ledger, the cryptographic, the components, the blockchain, the chain itself. There can be attacks there. When there's a peer-to-peer system, you can have attacks at that level. And the third is the application context.
Let's look at the payment system, for example, financials and so on. In that segment of the market, do we think this is a better secure solution than what we already have today? Is this going to add that layer of security that we're looking for to our financial systems in that segment?
Probably someone else is better qualified to answer that, but someone mentioned identity verification. So that's one of the know your customer, and I am aware that there's some applications in that area for which blockchain is applicable.
Okay.
Well, specifically, we run a consumer to merchant payment system, with thousands and thousands of users using it every single day. Specifically, why I think blockchain works well with financial payments. First of all, it's immutable. There's no saying, hey, this didn't happen, because it happened and everyone can see it happen. And second of all, there's no chargebacks. If you leave your card somewhere and there's thousands of dollars in chargebacks, you call the credit card company and they edit a button in their database. That's all it is. It's a database. And a lot of companies, I don't think, need to use blockchain. Like there was a company that reached out to me for software licenses, and I was like, I understand for financial payments, I understand for supply chain. I don't understand why a lot of people get into blockchain, because it's slow. Blockchain is super slow. A SQL database would crush most blockchains, most decentralized blockchains. But specifically on financial payments, the immutability, I think, is one of the biggest parts of why blockchain works with financial payments.
Yeah, I can take an example to illustrate that, because we just announced a partnership. Obviously, my focus is only on telco, media, and entertainment industry within IBM, and so we have some large blockchain networks that we've created. We just announced a partnership with a lot of carriers, especially in Asia, now extending into Europe, about a cross-carrier payment solution. It's going to be on a blockchain network. And obviously the key fundamental concept about immutability is obviously there, but also the fact about how to get rid of the middleman, if you will, the additional cost associated with it. And obviously from a carrier standpoint, they would like to use this as a revenue generating opportunity. As far as the big concern we noticed when we announced this partnership from a security standpoint, and obviously when we do these businesses, security is the last thing that they discuss, because it's all about generating revenue. There's an expectation that all of these things will be provided as part of the solution. But from a security standpoint, one of the big concerns was data and data privacy, and how data would be managed between certain countries when some of these data and transactions pass through. And one of the ways we handle that obviously depends where your data centers are and which pieces and subsets of the data go through the blockchain network. But one of the ways we handle this is providing a combination of private and public cloud, so that the carriers can handle accordingly. It went live, so it's not fully scaled yet, and I'm sure we'll find some challenges with scaling too, but that's something that we announced. I mean, if you Google it, you'll find it.
Yeah.
No, for you.
Oh, for me? Oh, great. Well, let me pull it back one level higher for just 1 second, because a lot of the things we've been talking about right now is just technology, right? But in the context of data breaches, most data breaches are not being done by like hacking in the sense of I'm sitting on a computer and typing some code, because 90% of all hacks are social engineering hacks. And that's actually where blockchain-based solutions becoming way more useful in the sense of, if I don't have to have access to certain data at all times, meaning if I don't have to maintain my own copy, well, then I can be social engineered, I can be hacked. Because ideally, and that's what you're going to see moving forward, specifically what the lady mentioned earlier about self-sovereign identity, ideally you shouldn't actually have this data until and when you actually need it for a particular transaction, and then the rightful owner of that data should have it under his or her own full control. So that's actually the main benefit that blockchain-based solutions provide, because blockchain technology is not new. It wasn't introduced with the Bitcoin white paper. It was actually referenced in one of the footnotes from an earlier paper 10 years before. So blockchain technology is really just the idea of hashing data in a consecutive manner. Blockchain by itself, though, is that network that provides the incentive system that by itself actually provides the immutability, quote unquote. Obviously nothing is actually immutable, it's always trending towards that. But the larger point being is like the typical scenario where people think, well, I can hack, quote unquote, a blockchain and then obtain whatever blockchain-based assets are being generated. On top of that, it's being defeated by, if I do that, well, the value of that particular blockchain-based asset is going to go to nothing. So it's self-defeating, and that's actually the main security incentive that's being created. It's not on the technology level, necessarily. Do you want to say?
Yeah, sure. Thank you. And one more in regards to security, I think what we need to do, and this is a big chance with the blockchain technology, is to work together on a standard. Because what I experienced in the last 15 years of the IT business is this is the first time where really the companies are sitting together to talk to each other, even if it's competition. So, for example, in the EEA, so of course I'm working with Intel together, we are working with NVIDIA together to work on a basic level of security, because what means distributed? Distributed means everybody can contribute. How stupid it would be if the internet could be accessed by AMD only. Would be nice for us, of course, I agree, but the system could run well on that. So that means we need to find a consensus together on a basic level driving this technology. And we had this morning a discussion about forming standards. I think, or a basic API where we can work together, because blockchain, from my point of view, will be an accelerator to really move our world into the digital age, where we can really link different systems together to interact with each other. And just in regards to payments, I think micropayments, they are only working within the blockchain-based ecosystem. So, and there are so many use cases around leveraging this, where we really need to work on a common standard.
And I just wanted to say for clarification, I think when we talk about security, we're not talking about negligence. We're not talking about, you know, somebody with a $5 wrench hitting you across the head until you give them what they want. You know, it's actually inherent bugs and you know, cryptographical errors within the software. That's what I think we're all talking about security. So I just wanted to say that for clarification. You know, negligence is always going to be a part. You know, a Nigerian prince could always scan you out of the army, right? But what we're talking about here is specific, you know, inherent flaws within the blockchain.
Yeah, if you're part of any crypto community, especially if you're involved as a company building solutions, decentralized solutions, then you might stumble upon problems as I do on a weekly basis, whereby I'm being contacted by my fake co-founder every, you know, once in a while, once per week sometimes. And what is interesting, you pointed out that you know, it's about the community. So it's not only technology, it's about the community. And if we look at Bitcoin, Bitcoin is secure, so it's resilient towards 51% attack, not because it's, you know, technologically, only because it's technologically advanced, but because it has grown in resilience in those years and has a community that most probably cannot, you know, due to some game theoretical concepts, cannot just get hacked, you know, on the 51% basis. As a B2B sector, I think we're now moving from distributed world towards more decentralized world. And distributed does not equal decentralized. And what we see now within EEA, not EEA games, but the Ethereum Enterprise Alliance, we see that there are some initiatives such as Mainnet Initiative initiatives or how to connect existing Ethereum or permissioned versions of Ethereum into the mainnet, and standards are being applied, and people talk about how to actually build bridges, and it's still questionable whether or not that can be done at the layer 1 stage. We believe that these things can be tackled on layer 2, because you don't want to touch layer 1. Layer 1 needs resilience. It needs to build resilience. And in the future, most probably enterprises will move from distributed towards decentralized. But it will take time, because enterprises hate to lose control. That's what they actually really hate, especially the old guys. But we'll see what will happen in the future.
Are we moving too far if we talk about layer 0?
No.
Okay. If you haven't looked into this, so what we're seeing now is that a lot of these functions, i.e. in form of cryptographic parameters, move actually to layer 0, which means the actual protocol end, like the protocol that you use on a daily basis, like SMTP and so forth, is going to move on that level. So we see the first implementation where this is happening, to the extent that blockchains will probably mostly be understood as applications, right, rather than as utilities to build new protocols. They're kind of second layer protocols in that sense.
So one last thing I would like to add is, when I talk about security, it has 3 main aspects: confidentiality, integrity, and availability. So I think blockchain is better suited for integrity and the availability part, and much less for the confidentiality part, which ties back to the privacy of the data.
No, that's simply not true, because we see actively how people move to layer 1 and then eventually layer 0, where everything is already completely encrypted. So even that you have a ledger, there's nothing that you can deduce from the ledger itself. There's no information being stored. You just see some whatever hash data. It's impossible to penetrate at that point.
By the way, feel free to join this debate. It's like, make it more interesting.
So yeah, no, I agree with you. What I was trying to say is the current state of art. So right now, so there's a lot of private computations that have to happen. And like I think you mentioned that you cannot put encrypted data on the ledger, even if you don't. So right now, the current state of affairs, I feel you definitely, there's no way to do like private computations. It has to be off-chain.
Right.
And yeah, when we get there, great. But right now, I don't feel privacy is a big aspect.
Yeah. Advice to everybody: do not buy drugs, alcohol, weapons.
So I think, by the way, I like the notion of, you're right, but I disagree with you. But go ahead, I'm sorry.
So the blockchain is like the infrastructure-wise and the peer-to-peers and all this thing is secure. But the weakest link is in the wallet, right? So wallet are still on the iPhones or on the computer, which is running around with hundreds of viruses or bots sitting on there and then keep tracking where the keys are. Right? So how you can solve that problem?
Oh, you first.
Thank you. This is exactly the point where we want to solve this bridge due to hardware. So the Ledger wallet, for example, where you have this additional hardware key, which is additionally storing your private key. And I think this is what is available today. The next level must be something which is stored already in devices, like Samsung did with their smartphones.
So yeah, it's 2019. I don't think somebody should be carrying around a exclusive hardware wallet around every time they want to buy a cup of coffee. That's why we're mostly software wallets right now, and we've encrypted a lot of things. Like for example, all the KYC information that does get sent to us, it gets cryptographically hashed, and we can't even access it. We don't even know who you are. But all we do is relay the information for any service that you want to join onto. And to your specific point about different viruses and how all those impact specifically iPhones and Android devices, is there's things called, for example, BitID that we use where if a transaction is being sent out, it gets sent out specifically from your device, and that actually relays the information saying yes, this is a legitimate transaction, and and this user actually wants to send that specific transaction. And you know, it is a kind of a conundrum, you know, because we are non-custodial, my company specifically, but obviously custodial services like Coinbase or Gemini or all these, BitGo, which has $14 billion under management. So one of the larger players in the space, for example, if I die, where does my money go? If it's in a completely decentralized wallet, well, it goes into Ether, it goes into nothing, right? Not Ethereum, sorry, it goes into nothing. Yeah, it goes into nothing, right?
If you forget your key, right?
Yeah, you're out of luck. Again, that's one of the negatives about unbanking yourself, is that there's the worst party is yourself. Any sort of negligence or anything like that is yourself. But that being said, if you're a merchant or you're paying credit card or interest fees or anything like that, banking services, Amex charges close to 4% on every single transaction. That's theft. That is theft. When the blockchain can do it so much better, i.e. slower, but it's getting there.
How much does Simplex charge?
They charge around 8%. Yeah. So yeah, so that's what I'm saying. Like we run a P2P decentralized merchant to consumer marketplace and payment system. We charge 1%. We could have done it for free, but then there goes my business. Right?
But you're not going to be carrying like millions of dollars.
No, actually, during Consensus in New York, somebody came up to me with the wallet and said, "Hey, look, I trust you over anybody." What he did was he wiped his iPhone clean, his old iPhone clean, installed our wallet, and that's what he uses for his hardware wallet. He puts it on airplane mode. Now it's a hardware wallet because there's no other software other than Apple inherent security flaws. But we even circumvent that by adding our own security solution on our wallet. So yeah, somebody actually showed me $72 million on the wallet, which is, I wouldn't keep it there. Because I don't trust myself with my own wallet. If I add an extra zero, there goes whatever amount of money actually goes. I would trust it with a custodial solution when it's that much money. But for example, our file size is very low, almost under 20 megabytes on Android, megabytes for iOS. So any old phone on these third world countries, old Android devices that cost $40 to $30 for a cell phone, they could actually use this wallet as their own banking infrastructure. So yeah, there are some inherent security flaws, and of course, there's people that could add keyloggers and all sorts of malicious software to attack you. But at the end of the day, it's a small price to pay for having a bank on your phone.
The third world is a good example because we in this room probably all have bank accounts and credit cards, right? So we are not really typical in the sense of we are kind of bank customers or victims, or most of the people here call them. And the point there being is we are in a state of learned helplessness, as in we have custodians that take care of our quote-unquote money, and we had those for the better part of our life. However, if I am in sub-Saharan Africa, or I am, for whatever other reason, unbanked, then previously I would run around probably with a wall of cash, right? So compare that with his wallet as one example. So that wallet is many times more secure than whatever wallet, wall of cash this person was carrying around. And that's actually where most of the innovation will have their first clients, quite obviously. We are not a good subset of people that need most of these technologies that we are creating right now. We're creating them mostly for people who then subsequently will leapfrog us. And the example I always use is we didn't put rotary phones with a copper cable in any of the huts in sub-Saharan Africa, right? They immediately got smartphones, and all of a sudden now they also have a digital wallet, and they will never have a bank account. For them, the idea of leaving their money with a bank seems absurd, outside of all those cases where banks just falter. Even in this country, just go to the FDIC website and see how many banks just in this country failed. I think since 2000 it's 560 or something. And this will happen again, it always happens. This is not something that is actually secure, that's just marketing.
I was just going to change the subject a little and looking into the future with quantum computing and the power that that'll bring. Clearly not there yet, but blockchain isn't matured in the way it needs to be yet either. There's a lot of emerging technologies that are going to be changing some things. So at what point do you start to concern yourself? And are you concerned about being too late in thinking about that? Or, you know, is there, I guess just what are you thinking about, you know, some of these things coming about?
So specifically on quantum computing, Google actually launched a paper. It was put on NASA for, I believe, 4 hours, and then NASA took it down. So they're making great, you know, strides and leaps towards that technology, and I'm sure it'll have a huge impact in blockchain. But on the vice versa, you know, there's great leaps happening in the hardware and software side of blockchain. For example, partition hard drives on phones, partition RAM, and partition CPUs, which HTC already has a phone out just like that. So that helps a lot of inherent security flaws when it comes to, you know, software interacting with each other on your phone without you knowing it. Like log in with Facebook, you know, the software like that. Facebook gets compromised, whoever's logging in with Facebook gets compromised as well. On the second part is quantum resistant ledgers. Those are already out. There's several prototypes and there's several blockchains out there that are quantum, quote unquote, quantum resistance. You know, it hasn't been field tested because there's no quantum computers to test it. But cryptographically, you know, SHA-256 is not, you know, the NSA released SHA-256 in 1996 for public domain. There's so many better cryptographic algorithms out there. You know, let's not just focus on Bitcoin, but you know, when it comes to industrial blockchain use, I think quantum resistant ledgers are easily going to be implemented before you'll see any sort of quantum computer hit the market.
Actually, yeah, just a comment on the third world using, you know, phones as banks. If you basically Google and look at M-Pesa, M-P-E-S-A, in all the African countries, a lot of the carriers are already doing that. Because basically, to the correct comment, I mean, they've leapfrogged into that, and so all of the carriers are trying to be the banks, because it's very difficult to be the bank. So using a $25 or $20 mobile phone, basically the concept of banks has already been initiated. And now the companies are looking at how to create a blockchain behind the scenes to ensure seamless integration between peer-to-peer, if you will. To your comment on quantum, well, IBM also do some work in quantum. We still haven't done too much work on blockchain linkages with quantum, but I would say the one that we are very focused on, I mean, quantum's a few years away. We obviously have spent a lot of money on it. The one that we are focused on is how 5G will take the blockchain use cases to the next level. So our focus is on building the networks, creating the networks, selling the networks, getting the ecosystem created, and then we believe in the next 18 months or so, the 5G use cases would be the next set of use cases on these networks, which will help scale. A lot of the use cases traditionally tend to be cost optimization. What gets excited everybody is about revenue generating, and we believe the 5G use cases, once you have them on the network, is going to create the next set of revenue generating use cases.
That makes a lot of sense. Yeah.
So the quantum aspect, so I mentioned like the three things that can be attacked in the blockchain. There is a cryptographic primitive, and then there's the peer-to-peer system and the application comments. The quantum thing is applicable for the primitives that are, the cryptographic primitives that are being used. And we know like which cryptographic primitives are quantum resistant. So as long as you develop a blockchain with the, for example, we know RSA, which is being used very widely in a lot of applications, is not quantum resistant. So whatever new cryptographic primitives that are being developed and researchers know to test whether it's quantum resistant. I think that shouldn't be a big problem, but that's certainly a very important aspect to be considered.
More questions?
So about the forking and security and how you guys address that, is that a problem? I know it's something in the news as well, so I'm just curious.
Like specifically Bitcoin forks and things like
or
that?
if they exist in private as well, when you're upgrading certain code and managing just a
Yeah, I mean, so we actually launched after the Bitcoin fork, the big Bitcoin fork, which is Bitcoin Cash and Bitcoin. But there's so many little subsets like Bitcoin SV. There was Bitcoin Gold and Bitcoin Diamond. You could fork, anyone could fork Bitcoin. The aspect of that is, especially on security, is protocol upgrades within Bitcoin. So for example, like you said earlier, you know, if you find a bug in Bitcoin or Ethereum or any cryptocurrency, distributed, decentralized cryptocurrency, how do you fix it? Well, you have to pretty much propose an improvement protocol. And after you propose an improvement protocol, it's very, very slow for the miners to actually accept that improvement protocol. Because some, you know, when we call forks, there's two types of forks, there's hard fork and soft fork. If you change the code too much, it literally branches off like a road, right? So you'll actually have a fork in the road. So it's two different things. And then there's a soft fork. Instead of a one-lane highway, there'll be a two-lane highway, right? That's kind of the rudimentary version of what a fork is, right? But a fork essentially creates its own ledger. You know, before the fork of the road, the ledger's the same, and then it creates its own ledger, its own blockchain. I wouldn't say there's too many inherent security flaws. I think what people are most upset about is not having access to your specific fork. You know, because if you're in a custodial solution, you know, for example, like a bank, like if you know, Bank of America or Wells Fargo holds your cryptocurrency and there's a fork, you know, they may not support the fork and they may not give you your cash, right? That's what a lot of lawsuits have happened as of late. But you know, that being said, you know, if you own your keys, you can do anything you want. That's why maybe having a non-custodial solution, you know, yeah, it's a little bit more inherently flawed, especially with hardware and software wallets when you own your own funds, because you are the point of failure.
I think in the proof of work, there's a specific security concern where proof of work only works for the chain with the most hash power and the longest chain. So what do you think about when you fork off and say one fork has much more hash power like Bitcoin versus another fork which has less hash power? Couldn't the smaller hash power fork be overpowered and overridden by miners who want to switch over their hash power to this smaller fork?
Oh, absolutely. You know, if I started a blockchain right now and I had my one rinky-dink computer, you know, my MacBook, you know, running that one single node, all it takes is two computers now, two MacBooks, to overtake and pretty much falsify transactions. So it is a trusted network. But when you have all these different nodes and all these different computers solving this problem, that's all blockchain is doing, is solving the next block and processing transactions that are located in the block, the metadata on the block, then there isn't really too bad of repercussions. Because remember, Bitcoin incentivizes, cryptocurrency, blockchain incentivizes, distributed decentralized blockchains incentivize good behavior because you get rewards for doing the work that your computer's doing. That's what mining is in a nutshell.
How about in the case of IBM where they're private blockchain? How do you guys manage forks or security within your clients? That concern?
The answer would be yes, but you know, it's more with the technical people, so I can't clearly answer. But the answer is yes at a high level. Our biggest concern, back to the comment I mentioned, is about data. A lot of the concerns and questions that when we sell our businesses to the clients is about data. How do I ensure some of my data stays within us? How do I ensure some of it goes with the blockchain network? So the way we handle that, besides the regional, geographical data privacy issues and concerns, is using a combination of hybrid cloud.
Mark?
Yeah, but just, because there is a lot of talk about how decentralized the public blockchains are, right? Particularly, you know, for cryptocurrencies and so on. But realistically, if you look at where the miners are and the mining factories, there is a significant amount of centralization, right? There is 3 or 4 organizations that own the vast majority of the miners around the world. Some of them happen to be in places like China and so on. Any concern, just from anybody on the panel, about the high degree of centralization and concentration in the mining space and public networks?
Yeah, I mean, specifically, mining consortiums, they exist, and it's actually more, they actually make the hardware and the software to help you mine, the Bitcoin, help you solve the problems. And because remember, Bitcoin is very antiquated. It's not like GPU mining. It's, it's not like Raspberry Pi proof of stake, delegated proof of stake, proof of work hybrid mining. It's ASIC mining. So it's essentially binary. So you have to have very specialized chips, and that's why these mining consortiums exist. And how proof of work really works is through pools, right? So if I was to mine a computer, if I was to mine Bitcoin just by myself without joining a pool, it would literally take me, 30,000 years to get a reward? But if I join a pool, and say they have 10% of the hash power of the network, then however much work I input into that single block is the reward I get back. So these pools are necessary, and yes, it is threatening to the ecosystem of digital currencies, but yeah, I mean, that's one of the inherent flaws for proof of work. We'll go over that, especially with proof of stake. I have my opinions on that.
I can't agree more on that. No, essentially, this is exactly the point why, for example, a lot of proof of work concepts are going over to GPU power, that you can really keep the system distributed. So that's the point all about. Everybody needs to contribute. On the ASIC miners, not everybody can contribute. Theoretically, yes, you can contribute, but if you have just a single device, the return of invest will be minus whatever, because you need to pay for power, right? So, and therefore, currently, we see the systems, if it's a proof of work based on graphics cards, where you can really make sure to keep it decentralized, not manipulated by specific parties. Because, honestly speaking, just taking the example of Bitcoin, we know that the majority is owned by 3 parties. Theoretically, if those 3 parties doing a similar summit and making some stupid decisions, manipulation could happen theoretically. And I also think that in the near-term future, the next couple of years, we will see more and more proof-of-stake concepts or hybrid concepts. So being very honest, it would be fully sufficient, for example, just for the sanity check to have a proof-of-work chain like Ethereum, and on top of that, you are sticking your proof-of-stake concept depending on your application. Yes?
I have a question for IBM. You guys are basically providing the platforms to build all these blockchain applications, right? But what's the future of IBM once everything's going to be decentralized?
When you say what's the future of IBM?
Because people aren't going to be using your server, they're going to be just going all around the world. Right?
And that's perfectly fine, because the way we have blockchain software, it is working on private cloud, public cloud, and so a lot of the solutions going forward, we believe, is going to be on a combination of hybrid cloud. So that's why I think we are looking at what the clients are looking for, and we think that's the way it's going to work.
And you also joined the Ethereum network, right, recently?
We have a lot of blockchain services. We have a lot of clients who probably don't use IBM blockchain software. They want to use an Ethereum software, so we have flexibility for that also. So we provide blockchain services. For example, we are partnering with SAP to create another solution in the media space. So you have to be in an open network. You have to be flexible, working with the other competitors, if you will. And you have to do what the clients are looking for. So that's why we actually created a combination of blockchain which works in a hybrid environment.
The gentleman in the back. Yes.
Yes, there's a lot of activity going on developing new hardware platforms in form of credit card form factor with biometrics, which can work as a payment platform as well as
So the specific payment method that you're talking about is SWIFT. So that is a card rail that people use. That is very centralized, and that's been hacked way more times than blockchain's ever been hacked. I want to backtrack a little bit just to defend, you know, the whole IBM issue. Is I don't think that everything needs to be on a distributed ledger. Not everything needs to be decentralized, distributed. You know, and in my internal processes, it's easier and quicker to have an internal blockchain or just a regular database, a regular encrypted database is much, much better than having a blockchain that's distributed and super slow. Right now, if I want to buy a cup of coffee with Bitcoin, it would take me 10 minutes. So I'm just supposed to wait for my coffee to get cold, which I guess wouldn't be that bad, you know. But still, you know, that is not what we need in 2019. You know, so what I think is the distributed ledger internally is much better. But back to your credit card thing, I don't think that really solves much of the issues or really even hits the head on blockchain. All they're doing is they're storing cryptocurrency on a custodial solution and then distributing it on a centralized server, which is inherently flawed. That is the biggest security flaw that you could possibly have when it comes to traditional payment rails.
So maybe going back to blockchain, so there's no such thing as a private blockchain, obviously, right? So whenever you talk to any of our startups, they will look at you, that's like saying, there's a private internet? Oh, I've never been on that. Okay, so yeah, it comes back to, you need to identify what is actually the innovation that the blockchains introduced. And there's three things. So you got the first ever digital bearer instrument. So when I give you cash, you don't have to check whether or not I have the right to give it to you. You just have it. That's what a blockchain creates for the digital realm. Then secondarily, it created the concept of smart contract. Something, think of it as a digital vending machine. You put something in, something comes out. There's no one needed to actually execute that. And then it introduced the decentralized autonomous organization, of which mostly Bitcoin is the only example, Bitcoin uppercase B. So the confusion in the space that always comes in is to confuse the cryptocurrency with the actual network, so to speak. So what do I mean by that? Specifically in Bitcoin, to this day, 99% of people that use that term do not differentiate between the currency and the blockchain-based asset. So Bitcoin uppercase B, that's the blockchain network. It will work with anything you want to build on it. It's very complicated to build on the Bitcoin blockchain, but there's a couple of applications that run on it, and Abra, for example, is one of them that's mostly built on the Bitcoin blockchain. And Bitcoin lowercase b is not money. It's the mining reward, right? It's the incentive systems for the miner to keep the network running, because the thing that Satoshi, whoever that was, didn't create is the minting process. I mean, he also doesn't talk about mining in the Bitcoin white paper itself. But if you want to use that metaphor, that analogy, then he created the mining process, he never created the minting process. But honestly, it's not needed, because we all have accepted the fact for a long time that what you understand as money, fiat in your bank, fiat in your wallet and so forth, is simply a unit of account, just like a liter is a unit to measure water, and it doesn't matter to the water if you measure it in quarts or liters, it's still the same water. Just like it doesn't matter to a byte whether you call that byte a Bitcoin, a dollar, a yen, and so forth. My larger point here being is, currencies solve the most basic economic problem, which is the barter problem. I want something that you have, and you don't have anything that I want. So the point here is, what we're building is not a replacement for money. We're building a system, a universal barter system, that replaces the need for legacy money. And you can call the units whatever you want. And as far as security is concerned, to bring this back on topic, so to speak, you don't ever actually have to attach any value function to what you're exchanging, because you're always just exchanging bytes. You already do this on a daily basis, always. And you're already storing your value in something else. You have a deed to your house, you have a title to your car, you have whatever, stock certificates maybe, although they're not really around much more anymore. The point there being, whatever you store your value in, will reside with you, will be in cold storage. You're exchanging value, and whatever you're using for that will touch that mechanism for nanoseconds because they're bytes. They move at the speed of light. So we are in this intermediary phase where we've got a lot of startups that interject in themselves, trying to create new money, trying to create new tokens and coins. They are not needed. You don't need them. You need the currency, which is the value exchange system, which is the blockchain itself. And oftentimes, to your example, I don't want things to happen in nanoseconds. I want them to take pretty long time. It's like I'm transferring the title to a house. Well, I probably want to create some safety mechanism and have a couple of people look over that, right? If I buy a cup of coffee, by the way, I can do this with Bitcoin in nanoseconds. So we got Bhatt here from Blockchain ATM, and so they don't wait for confirmation because they have enough data so that they can just transact on that. Right?
Absolutely, and there's things like Lightning Network and second level solutions, second layer solutions.
Yeah, that's always what I hate with a passion these examples of like comparing Visa with Bitcoin. Makes no sense, right? It's like Visa has never settled a transaction in the time that Bitcoin did, right? Like a Visa card transaction settles when? No, 30 days, if you're lucky.
Well, yeah, anything's reversible within 30
Yeah.
days, so it doesn't settle.
Speaking of coffee and drinks, and so on, okay, that's a great introduction to our, tabletop exhibit reception. So first of all, I want to thank the panel for taking the time and really enjoying this great discussion. Really appreciate your time, the fact that you took the time and joined us. Thank you very much for that, and thank you very much for